All right, thanks a lot, Jeanette. Welcome everybody. Happy Black Friday. Happy post-Thanksgiving for those that are celebrating or celebrated. Hope you're able to spend some quality time with friends and family, or maybe you got lucky and you were able to dodge them and dip out early and spend some time on your own. But anyway, I hope everybody's doing well. I want to say thanks to Jeanette and the TradeThirsty team for putting on a great TradeGiving Toasted Traders event. This is an annual event. I was excited to be invited back to this. And if you are here, hopefully, and you're listening, you are here to see my 3-point price action formula to spot market reversals for any market in any time frame. And I get really excited about doing this presentation. I only have a couple of topics that I actually do present on, and because I don't really need dozens and dozens of strategies. I don't chase a bunch of different strategies, different formulas, different holy grail. I just focus on a bread and butter strategy that has really worked for the past 15 years, and started using it on mostly on an end of day time frame to swing trade. I was going, working in a corporate atmosphere, not able to check my phone, minute by minute. It was probably the best thing that could ever happen to me. And over time, I've dialed it down. I've come down to some of the lower time frames if and when I have time, but basically it works in all markets, any time frames, and I'm going to prove it to you. So hopefully ask all the questions you want during the presentation. I'm going to really focus on the presentation itself. I want to get to the meat, or through the meat of the strategy, actually teach you something actionable that you can begin applying immediately. And then hopefully I'll have a few minutes to answer your questions, and we can take a look at today's action. It's a quiet market environment. Markets are closing early, but I'll show you exactly how this strategy that I'm about to teach you is working in real time. So it's pretty powerful stuff. Continues to work great day after day. So let's go ahead and get started. How's the sound? Just want to make sure everybody can see my screen. Sound is good. You should see the risk disclaimer. We must always start with the risk disclaimer as required from the regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results or substantial risk of loss in trading. Only risk capital should be used to trade. You can lose money in trading. So the Cliff Notes version of this: don't trade with your rent money, your mortgage money, your child's educational funds, your milk money, and so on. So everybody see that okay? All right, guys, let's go ahead and get started here. We got a lot of folks in here, a lot of people eager to learn some new strategies. We've got a great lineup. Let's go ahead and get to it. I want to introduce myself once again. My name is Silas Peters. I'm founder, head trader of Seasonal Swing Trader. That's me standing in front of my alma mater at the University of Alabama in Tuscaloosa with my two beautiful daughters, and just some other pictures of my family and I hanging out, showing you that I am a real human being. I'm not a robot. Love to hang out with my family. We love the beach. We love the water. I do like to play golf when I have time to do that. And then there's some pics of my two girls there making some homemade COVID masks, but hopefully we're rounding that corner. 3 days after I graduated UA, I actually sold my car, packed up my small belongings that I had left, and I headed straight north to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. I was immediately bitten by the trading bug, and frankly, never really looked back. While there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large floor spec traders. Also been a part of building and managing several futures and equity brokerage firms, broker dealers, managing operations, trading, back office, sales, and support. I've also worked as a private family office investment consultant for ultra high net worth individuals. Hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. But let's talk about my journey. It wasn't always easy. Most of traders' journeys are not. There was a learning curve, several obstacles and hurdles on the path to where I am today. First step was obviously learning. School does not teach real life experience in the markets. But in the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think that it was, but ignorance and greed cost me my profits. I blew up an account, then I blew up several others in what I like to call revenge trading. Who here is familiar with revenge trading. A lot of you are, absolutely, yeah. Certainly not fun, but it was a learning experience. I chalked it up to part of the process. I finally went back to my roots. I settled down, worked my process, and found overall consistency. But let's talk about you. Does anybody's trading desk look like this? Does anybody's trading desk look like this? This is actually not my trading desk. Poor attempt at humor, if you will. I found this on the internet because I feel like it's the perception of what those on the outside looking in think this is what us traders do, that maybe we're crammed in a basement, surrounded by monitors, and we've got lines and numbers and quotes and CNBC all in the background. Certainly not the case. Now, my desk did look like this in Chicago for obvious reasons, but now I've since pared back to just a handful of monitors for charts, quotes, trading platform, and the internet for day-to-day operations. But all this does is it really leads us to this slide, which is paralysis analysis. So who here is a victim or has been a victim of paralysis analysis? I'm raising my hand. I've been there, done that, got the t-shirt. Not fun. Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who here has done all the analysis they possibly could? They crossed the T, dotted the I, got their finger on the mouse, get ready to pull the trigger, and then what happens? Whoops, this line crossed that line, or this number did this, or there's something that negates our overall analysis or bias on what we thought we were about to do. So absolutely, yeah, a lot of you are there, and hopefully today I can help kick the paralysis analysis demons. So I really appreciate the interaction so far. What does everybody trade? I'd like to see what kind of crowd I'm talking to. Do you trade stocks, options, futures, Forex, maybe even crypto? Of course, crypto being hot right now. I don't trade crypto actively. I do have an account, Bitcoin, and a bunch of altcoins in various accounts across the internet. Probably lucky if I ever am able to get into half of them with all the key codes and whatnot. But I do trade stocks, options, futures, and Forex on an active basis. So we've got all the above: Forex, options and stocks, weekly options, futures and Forex, stocks, options, ETF, SPACs and options. That's a first. Stocks and options, futures and options. Cool. Yeah, a lot of people really all over the board, stocks, a lot of stocks and options traders, and that usually is the case, followed by futures and Forex. But regardless of what you trade or what you may consider trading, it works in all markets. What I'm going to share with you works in all markets. It's highly accurate, it's profitable, works in all time frames, and it's 99% mechanical. And most importantly, it's simple. So we're not here to teach rocket surgery today. I want to keep things simple. I like to keep things simple in trading and in life, and hopefully it just makes our day-to-day a lot easier. So I do have an agenda and promise to you. We're going to learn a simple mechanical setup together that is repeatable regardless of the market or time frame. Speaking of promises, if you've ever seen or followed or heard me before, you may have seen or heard something about the $10,000 trade promise. Well, I'm not going to promise you anything today, cannot promise you anything in trading or life, but these were $10,000 potential trade setups that we talked about in multiple free presentations such as this one. This is CRUDE on the left, RBOB unled on the right. We also had a third market, Nat Gas. They triggered and met their $10,000 trade objective based on the simple strategy that I'm about to teach you here momentarily. We also talked about sleeper markets in coffee and OJ. You can see from a 5, 15, and 30-year historical price perspective that the markets tended to bottom out at this particular time of the year. Does that mean that we went and bought these markets? We got long, we bought call options, sold put spreads? No. We said sit on your hands, wait patiently for this very simple pattern to occur, the one that I'm about to teach you, and that's what happened. They triggered, and they went on and met their $6,000, $7,000, and $8,000 per contract price objective. We also talked about sleeper markets in corn, beans, and wheat. Corn on the left, beans on the right. You can see it from a 5, 15, and 30-year historical price perspective that the markets tended to get quiet or bottom out at that particular time of the year. That's exactly what was happening. The markets were almost being lulled to sleep by market participants, coiling up, getting ready to potentially go higher. We said sit on your hands, wait patiently for a 1 specific pattern to occur, and that's exactly what happened. They went on and met their $5,000, $6,000, $7,000 per contract price objective. Now, this is not all about futures, not all about commodities. I'm just showing you examples of this pattern repeating and occurring over and over again, regardless of what market you trade. So who here is ready to see the setup responsible for these recent trades? This over here is 800 S&P points. This is 160 points in cocoa. This is 300 pips in the Aussie Kiwi. And this is two $20 trades for $40 plus in Facebook. So who here is ready to see the setup? Drum roll, please, if you will. It is the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or 1, 2, 3 bottom. Who here is familiar with the 1, 2, 3? This is nothing new. Maybe it is to some of you. I'm seeing a lot of yeses, a couple of no's. This is one of the most fundamental technical patterns in the textbooks. We're talking technical analysis 101 here, but highly, and I mean highly, overlooked by most traders. So whether you are familiar with this or you are just learning it, you're going to start scratching your head wondering why it's not in your toolbox. So let's talk about the setup. It's price action based. The pattern is comprised of a low and then a higher high and a higher low and a break of the higher high in the case that we're going long. Same rules apply, but inverse when we're looking to go short. It anticipates a change in trend from up to down on a break below the D2 or B point, anticipates a change in trend from down to up on a break above the 2 or B point. Let's talk about the strategy. It usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. So one may argue, well, hey, is this a counter trend strategy or a reversal type strategy? And in essence, it is, but we're going to talk about ways that we could even filter this to put the odds even more in our favor of an already high probability strategy. I will stress it works extremely well when the pattern sets up at significant areas of support and resistance. Other high probability patterns such as head and shoulders tops and bottoms, double tops, bottoms, and more. Let's talk about the mechanics here. Don't worry about what asset class this is, what time frame. This could be Caterpillar, this could be Walmart, this could be Litecoin, this could be the New Zealand dollar. It doesn't really matter. We're learning the very basic mechanics. So for a 1, 2, 3 top, we start to get our number 1 point when we finish that highest peak at resistance and then begin to move lower. So we have a number 1. Market starts to move over. Once we stop making these higher lows, it pulled back. We get an established number 2. Market retraces higher. Once we stop making these lower highs and pull down, we get our number 3. Market could have come up here, or up here. As long as we don't take out that number 1 high, we have a valid 1, 2, 3 top setup. 1, 2, 3 top traders know that we're looking to get short on breaks or closes below the number 2, which is exactly what we get, and then we trade to the downside. Let's look at the 1, 2, 3 bottom example. As you would suspect, same rules apply, but only in inverse. So the market has come down. Once we find the lowest low here and pull back up, we get our number 1 confirmation. Market trades higher. Once we pull back, we get our established number 2. Market trades lower. Once we stop making these higher lows and pull up, we get a number 3. As long as we could have come down here, down here, down here, as long as we don't take out that number 1 low, we have a valid 1, 2, 3 bottom. 1, 2, 3 bottom traders know that they're looking to get long on breaks or closes above the number 2. We don't know what happened with the rest of this example, but that's where we'd be looking to get long. Let's look at some chart examples. I'll start with the 1, 2, 3 top here. And this is a chart of the Aussie dollar, the 6A futures contract. You could look at the ETF FXA if you don't trade futures, or if you don't trade futures or ETFs and you trade Forex, you could look at the Aussie US pair in the FX market. You're going to see the exact same pattern and setup. So here we've got some red circles. Let's talk about those. The red number 1 is a 52-week high. Now, it's not a requirement to be at a 52-week high or a 52-week low. Those are going to give you your higher probability patterns, but we'll talk about later how we can dial that in tighter say every 6 months, every 90 days, if you want more opportunities. So for this example purposes, we're looking for a 52-week high, which is what we get here as indicated by our red 1 circle. We have a 1, 2, 3. Market only retraces up off that number 2 by about 4 bars, but it's a 1, 2, 3. Again, it could have come up here, or up here, as long as we don't take out that number 1 high. We have a nice 1, 2, 3 top pattern. Now we already know what we're going to do next. We're looking to get short on breaks or closes below the number 2, which is what we get here. So what about the other important ingredients of the recipe? Like, where do I put my stop? Where am I getting stopped out? My risk? Where am I taking profits? Where am I putting my target levels? Well, very simply, our initial risk is above the high of the 1. Our initial target is a distance between the high of the 1 measured to the low of the 2, measured down. So we measure from here to here and then down. That's 225 ticks, or roughly $2,200 per contract. So you'll see that immediately it is a 1-to-1 risk reward ratio, but we're going to talk about ways later and show examples how you can quickly cut that risk in half. But it's very important to let the market materialize in your anticipated direction, because it does move that way more often than not. So once we start breaking down here, where's the next logical area to place your stop or move your stop or adjust your risk? Above the next area of resistance, in this case, above the number 3 high. So once we start breaking down, holding this area below the number 2 breakout, we can cut our risk from here down to here, thus eliminating by 50, 60, or even 70% of our initial risk, okay? Let's look at a 1, 2, 3 top in Walmart. Daily chart of Walmart. We have a red 1 circle. Why? Because it's a 52-week high. 1, 2, 3. We know what 98% of other traders are struggling with. Well, where am I going to get in? Where am I going to get out? Where's my stop? Where are my targets? We know that days in advance. We know that we're looking to get short on breaks or closes below the number 2. We know our initial risk is above the high of the 1. We know our initial target is the distance between the high of the 1 measured to the low of the 2 measured down, which is about $5 in this example. Let's look at some 1, 2, 3 bottom examples. 1, 2, 3 bottom. This is a 15-minute chart of the E-mini S&P. Now, on an intraday chart, whether you trade a tick, a 1 minute, 5 minute, so on, we're obviously not going to be looking for 52-week highs or 52-week lows. That wouldn't make much sense. So on an intraday chart, we're going to look for new session highs or new session lows. So if you're not familiar with futures and Forex, they trade virtually around the clock, opening up on Sunday afternoons, trading into the Asian session, into the European session, into the New York session, rinse and repeat through Friday afternoon's final close before the weekend. So wherever you start your trading day, whether it's at 3 a.m. in the European session, maybe the 8:30 a.m. Central New York cash open, maybe it's the last hour of the day, you're looking for new highs or new lows going back to that session open. So here we have a new session low as indicated by the red 1 circle, trades up, pulls back, we get a 1, 2, 3. Now let's talk about entries. A couple of different entry points here are such as, so the aggressive traders may work a buy stop, a tick or two above the number 2 high, you're triggered into the trade. Couple of alternative entry methods that I like to use are either to wait for the market to come back and retest the breakout area, which it does more often than not, or wait for the market to come hook back up above the breakout area. You see, we busted up, market rolled back down and hooked back up above the number 2. So using one of those entry methods, one of two things are going to happen. One, you're going to miss out on some potential profitable trades. Sometimes the market will bust up out of that 2, zip up and hit the profit target and leave you at the train station. But there's no need to get your feelings hurt. There's plenty of other markets and plenty of other time frames to trade off of. What is it also going to do though? Sometimes it will keep you out of potential false breakouts. Sometimes the market will bust up out of the 2, roll back over and not head back up, stopping you out. So if you wait for the market to come back up and through that breakout area, getting that second confirmation, that is another way to consider entering the markets. Let's look at another 1, 2, 3 bottom here. This is a weekly chart of Apple, held away to catch some longer term position type moves. Here we have a multi-week low, as you can see with the red one circle. We also have a double bottom, high probability double bottom. 1, 2, 3. Market breaks out above the number 2 here on this large bullish candle, trades sideways for a few weeks, comes back down and retests and our hooks back above. That's our confirmation to get long Apple. How do we play it? Well, we can buy Apple stock, we can buy call options, we can buy call spreads, we can sell out of the money put spreads. There's really multiple ways to play it. There's no excuse not to participate in these types of setups. Let's talk about failed trades. Don't start throwing tomatoes and banana peels at me. There's no holy grail in trading or life, but I know everybody here are big boys and girls, and we already know that. Here's a failed trade setup, one that I probably took in my live account. Here we have a vertical move here on a 5-minute chart of the E-mini S&P. 1, 2, 3. We also get the trend line break. Again, those aggressive traders may be looking to get short on breaks or closes below the number 2, or if you wait for that hook method, market comes back, hooks back down, and you're in profit by maybe 1 or 2 points. If you exercise any type of money management rules, you've moved your stop from the high of the 1 to above the 3 resistance, or if you didn't do anything, market traded up and stopped you out at your initial risk level above the high of the 1. Notice what we get. Has anybody spotted this? We get a new 1, 2, 3. 1, 2, 3. This high is greater than that high. 1, 2, 3. We get a new 1, 2, 3 top. Ends up being a nice profitable trade. And I like to show or talk about the no trigger or voided trade. It's neither good, bad, nor ugly. It is what it is. It's just a voided trade. And I'm telling you in a second why I like it when this happens. So here we have a 1, 2, 3, looking to get long on breaks above the number 2. What happens? The market breaks down, takes out the number 1 low. We start to count over 1, 2, 3, looking to get long and breaks above the number 2. Market trades lower, takes out the number 1. We start to count over 1, 2, 3. Finally are able to get long in this last attempt. So who can tell me why I like it when this happens? Can anybody guess? You get a gold star in your crown if you could tell me why. It's because we're having divergence, having some type of, well, not always, but we're likely having divergence. So the price action here is making lows, we're making lows, lower lows, but we're likely getting some divergence. So whether you want to plot an RSI, stochastics, MACD, you don't have to incorporate any of that. It's just one of those methods I like to add for added confirmation. We'll look at some examples. We're likely making higher lows, or i.e. no lower lows on the oscillator. All right, so I hope this is making sense so far. Let's talk about trade management. Again, the confirmation of entries on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Extra strategies. If you're only able to trade one contract, whether it's a futures contract, Forex contract, one option contract, or one share of stock, I would say go for the distance between the number 1 and number 2 points. Uncanny how it will often tag that to the tick and then reverse. Now, if you have the flexibility to scale in and out where we all want to be, right? I would say, hey, take a third off, half, 2/3, whatever it is. Target that distance between the 1 and 2 as your initial target, and then you can trail your position with however you prefer to manage your trades. Nobody can tell you how to manage your trades or your portfolio. You have to do that. So what I like to use, I like to target good old-fashioned price structure, areas of support, resistance, trend line breaks, and so on, but they come a dime a dozen. You can use moving averages, PAR-SAR, Fibonacci. You have to figure out what works best for you. So I've showed you that this setup works in any market, whether you trade pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zloty. Also showed you it works on any time frame, whether you trade a tick, 15, hourly, 4-hour, daily, and more, and on any trading style. Are you a position trader, swing trader, day trader, scalper? I'm gonna take a swig of water here. Tell me what your trading style is. We've got position in day, swing, tick chart, scalper, swing options. That's great. And the reason I always like to ask that is because it's pretty important to figure out what trading style works best for you and your situation, or i.e. find your bread and butter. What is your bread and butter? What works for me may not work for you. What works for Joe may not work for Bob. You've got to figure out, we're all different. We all got different amounts of time we can commit, patience, education, risk capital, risk tolerance, goals, and on and on and on. You've got to figure out what works best for you. For me, on intraday charts, I like the 5 and 10 minute. On the indices, CRUDE, some of the currency futures, 30-year bonds. I like the hourly, 4-hour to swing trade a handful of futures, and then the daily for all markets, whether it's futures, futures options, equities, equity options, and FX. So you've seen the proof. Let's look at some real trade examples, not to say that what we looked at were fake examples. They were certainly real, but let's talk about some real trade examples we've utilized in some of our services. So let's first look at crude oil. Everybody loves to talk about crude, speculate on crude, where it's going, where it could be going, blah, blah, blah. And this is a daily chart of crude. So whether you trade crude futures, crude CFDs, USO, other energy stocks, you're going to see very similar patterns and setups. So I'm going to look and work myself from left to right of the chart. You guys and gals can read all this text over here. So here we have a daily chart. We have a 1, 2, 3 top. Why? This red circle is a 52-week high. Now it's a smaller 1, 2, 3 top, I'll give you that, but it's still a valid one nonetheless. So here we have a 1, 2, 3. We knew where we were looking to get short. We knew where our initial risk was, and we knew where our initial targets were. So we get the break and close. It quickly meets our $3 or $3,000 per contract price objective. And then we go sideways. So I get asked all the time, Silas, is it working range-bound markets? What about markets that are consolidated? Well, in essence, yes, it should, right? Because we're looking for new highs or new lows. So you're really not going to get a quote unquote signal if we're trading in a tight range-bound market. But if you want to use this strategy and trade range-bound markets, by all means, help yourself. We have a lot of good setups here. 1, 2, 3 inside this range, and it trades to the upside. But I'm only looking for new highs or new lows, and we get just that. We get a new number one. How or why? Because this high is greater than that high. So we get a new 1, 2, 3 count. 1, 2, 3. Now let me tell you why I was very excited when I saw this. Well, one, because of the high probability pattern that we've just been talking about, which is the 1, 2, 3 top. Secondly, we're at a time of the year from a seasonal perspective where crude and energy markets in general typically tend to trade to the downside. So when we have those two things line up, it's what I call the perfect marriage in trading. So we got short. How? We shorted crude futures. We bought put spreads. We sold bear call spreads. We traded USO and other leveraged ETFs. We met our $4 or $4,000 contract price objective. Then we ultimately traded down another $20,000 per contract. Now, we didn't catch that entire move, but we damn sure caught a large chunk of it, and all we did was trail the market until we either got stopped out or we had a reversal. So we get a couple of potential reversals here and another one right here. Now, look at this. We have a 1, 2, 3 bottom forming. We also have probably my second favorite technical pattern is a triangle, and that is a beautiful triangle setup. And we are now at a time of the year from a seasonal perspective where crude and energy markets typically trade to the upside. In fact, this is one of the better seasonal trades I have in my back pocket. But what happened? The market broke to the downside of the triangle, which it technically should because it's trading in a continuation pattern. Sold off another $10,000 per contract or $10 a barrel. No worries. We got a new bottom. We flushed down another 10 bucks. We got a 1, 2, 3 bottom here, and we got that break above the number 2, and it made a $5 or $5,000 per contract move. And then we just let the trade ride out. Now, I want you to remember this chart and the subsequent charts because we're going to come back to them. I'll show you something really special. Let's talk about another one, gold. This is actually GLD, the ETF that tracks gold. I like to look at the futures or commodity charts first because they're a lot cleaner, a lot more fluid. You're not going to see all the gaps. But if you want to start with the ETF, that's perfectly fine. You're going to see the same setups. So again, let's just talk about the examples here. Here we have a 1, 2, 3 top. Market breaks down below the number 2, gives a couple of retests. We come down and reach our $4 profit objective. Here we go to the upside. We have a 1, 2, 3 bottom. We also have a double bottom. Market breaks above the number 2, get your retest, trades up, reaches $2 profit objective. Now, we trade sideways. We're going sideways. Here's again. Well, did you miss all that move right there? Maybe I did, maybe I didn't. I'm only looking for new highs or new lows, but here we have a 1, 2, 3 to the upside. Here we have a 1, 2, 3 to the downside. If you took those, congratulations. I'm only looking for new lows, so we start to get those. These lows are lower than these lows, so we're getting new number 1 counts. 1, 2, 1, 2, 3. Market gaps down, takes out this number 1 low just by a smidge. No worries. We get the new count, 1, 2, 3. Market gaps higher 2 days in a row. Boom, boom. Comes back and retest, and hooks back above. Also gives you a trend line retest. That's our signal or confirmation to get long gold. How? We can buy GLD. We can trade options, we can trade gold futures, we can trade mini gold futures, we can trade gold futures options, we can trade gold CFDs. Lots and lots of ways to play that, gold stocks, if you will. All right, let's look at Delta. This is probably becoming redundant by now, just trying to hit home the fact how frequently and often these occur. Delta Airlines, DAL, 1, 2, 3. Gaps up, comes back and retests the breakout area, shoots up for plus $4. Here we get a 1, 2, 3 top. Notice that the market gaps down below the number 2 breakout area. I don't chase those. Got some guys that will aggressively trade all these patterns and setups. I like to wait for the retest or the hook, so I'll probably pass on that trade. Here we get another chance to go short. 1, 2, 3. Market trades aggressively down below the number 2. We get a small retest, ends up moving $8 plus. And now we flip to look for long opportunities. 1, 2, 3. Market trades up and above the number 2 breakout, holds, trades sideways up, and the market comes back down, and then it ends up making an $8 plus move. And then for the Forex traders, this is a 4-hour chart of the CAD Swissy, Canadian dollar versus the Swiss franc. Those were all daily charts. This is a 4-hour chart. This is, so here we have a multi-session low, also have a double bottom, 1, 2, 3. Again, those aggressive traders are looking to get long here on that initial breakout above the number 2. Boom, you're into the trade. Or if you wait for the retest and or hook method, you're getting long back in here. We hit our 70 pip prop objective. Okay, what do we do now? Well, we don't have to sit there and scratch our heads what to do next. We're just looking for an opportunity to go short. So here we have a potential 1, 2, nope, 1, 2, nope, 1, 2, nope, 1, 2, nope, 1, 2, nope. Finally get our final 1, 2, 3 top up here. Notice that the candles are getting smaller and smaller, indicating that we're likely topping. We get the breakdown below, hook back down, reaches our 40 pip profit objective. And then I get asked all the time, does it work on intraday charts? Of course it does. This is a 5-minute chart of the NASDAQ. You can see 3 examples here. 1, 2, 3, market breaks above the number 2 and it hooks back above. It's our 13-point profit objective. Here we have a 1, 2, 3. Market breaks down below the number 2. Gives you a couple of retests here. We also have to pop some tums. It's taken a long time to materialize. Finally breaks down here, likely in the last hour of the day. Hits our 20-point profit objective. And then we flip and we get a 1, 2, 3 here, right here in the last hour or so of the day. Breaks above the number 2. If you're lucky enough to get long on that retest, you're filled on your 30-point profit objective there in about 2 or 3 bars. So with the invention, if you want to call it that, from CME with the micros, the micro S&P, micro NASDAQ, micro Russell, and the micro Dow at trading 1/10 of the size. You can trade those now, even in volatile market environments, without worrying about getting your face peeled. Even swing trade, and I think even more importantly, you can trade multiple contracts and scale in and out as the price moves in your favor. So why are you here? You're here to learn a mechanical, done-for-you strategy for all markets and all time frames. So this is the part of the presentation where I'm going to ask you, have I fulfilled my promise up to this point? So I'm going to take a swig of water here. My throat's getting a little scratchy. Have I fulfilled my promise? And if I haven't, at least tell me why, because I don't know how to break this down even easier. But if there is a way, I will certainly go research it and incorporate it into future presentations, because I really want to know how I can make it even easier. I was showing daily charts, 4-hour charts, and then that last one was a 5-minute. I will typically use stop orders to get in, but I will usually just set price alerts at those areas, because I want to see what we do, how we react if we hold above price. So yeah, everybody says yes. Something to chew on. I like that. All right, cool. So, but wait, there's more. You knew it was coming. So usually when people say, but wait, there's more, or hold my beer, watch this, it usually doesn't sound good or doesn't end up well for that individual. But I can promise you in this case, it will. What if this strategy that I just showed you was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say, man, that would be amazing. So do you remember the examples I just showed you? I hope you do. I hope you do. We just talked about them, but if you don't, that's fine too. Let's talk about them. I'll refresh your memory. This is that exact same CRUDE chart that we looked at just a few moments ago. But you'll notice something interesting here on the charts. All of a sudden, we've got these colorful arrows and these colorful lines. Well, I'm sure you've already figured it out, but let's talk about what all this means. So the green arrow is your number 1 point. The red arrow is your number 2 point. Your blue arrow is your number 3 point. 1, 2, 3. Pretty simple stuff. Now, what about these white chevrons or these white stealth signals? It's not a sell signal. It's not a buy signal. All it is a visual aid kind of waving at you saying, hey, we've broken or penetrated below the number 2, or we've broken or penetrated above the number 2. So it's kind of like an alert to say, hey, we've broken price. We may want to consider taking action. So if and only if we break the number 2, we'll get the chevron. And if and only if that happens, we'll get these 4 beautiful lines plotted onto your chart. Well, what the heck are these? Well, the blue line is considered your breakout, or could be an entry level. Your red line is your risk or your stop level. Your lime green line is what I call TP1, or take profit 1, or profit objective 1, whatever you want to call it. And the green line, dark green line, is TP2, or profit objective 2. So what is that again? What's TP1, TP2? TP1 is the distance measured between the high of the 1 and the low of the 2 measured down, and TP2 is 2 times the distance of TP1. What about all of these green arrows? Why in the world are we seeing all these green arrows? Well, it's because it's showing us visually that we are making new lows and lows and lows and lows. Once we stop printing new lows and trade up, we start to get our red number 2 count. Okay, this is 1, 2, 3 right here. The market traded lower, taking out that 1 low, so we start to count over. Notice that we never broke above the number 2, so hence no chevron, hence no lines on our chart. And then we finally get that down here. So that was that trade example I was looking to get aggressively long, but we broke to the downside. Here's that example on gold, or GLD. 1, 2, 3. Market breaks above the number 2, so we get our print. There's TP1, TP2, and then here's that range bound or consolidation we talked about. Now, we don't get any arrows because my settings are only looking for new highs or new lows, which is what we start to get down here. We're clearly trying to bottom out down here, as indicated by these green circles, or excuse me, green arrows, and we start to count over. There's that last low we get before we get our final 1, 2, 3 bottom pattern. 1, 2, 3. Market just trades above the number 2, so we get our print. We get the retest, TP1, TP2, and you see we're looking for a 1, 2, 3 top over here on the right. All right, Delta Airlines, here's that Delta. There's a long, there's a short, there's a short, there's a long. 5-minute NASDAQ chart. 1, 2, 3 is TP1, TP2. Hits TP2 to the tick, and notice that TP2 actually happens to be a new session low, so we start a new 1, 2, 3 bottom. 1, 2, 3, market breaks above, hooks back above, hits TP2, hits TP1, doesn't quite hit TP2, but it's good enough for government work. You shouldn't have lost any money. Trades range bound, makes a new low. This low is lower than that low, so we get a new count. 1, 2, 3. Market just nips its little head there above the number 2, so we get the print. Trades up, hooks back above TP1. Notice that while we're waiting and watching for TP2, we're getting new highs, new number 1 points. That clues us in to, hey, maybe we need to get ready to reverse or go short. We do finally hit TP2, and then we finally get that last 1, 2, 3 top of the day. 1, 2, 3, market breaks down, trades up, rolls back down, TP1, TP2, and we're looking for a new 1, 2, 3 bottom over here. So is this training for you? Really, you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the paralysis analysis, if you want to just simplify what maybe you're already doing, maybe you are already a profitable trader and you just want to add another strategy. Or if you want a very specific mechanical step-by-step plan that you could do even part-time, this training could be for you. So what I like to do is tell just a very brief story here. Is when I had this built out, this indicator built out, I brought my wife down to my office who teaches ballet part-time. I brought my 2 girls down who were like 4 and 5 at the time. Trust me, they don't know a flying flip about the markets. They still don't understand what I do, regardless of how many times I tell them. But after they got over all the candles and all the colors and whatnot, I showed them what I was attempting to do with what I just showed you, and they got it. The point is they got it. So if they can do it, a part-time ballet teacher and 2 young girls who are interested unicorns, then you certainly can too. We probably don't remember learning to count to 3 or learning our primary colors, but if you can do that much and have a little bit of common sense, then the training probably could be very well for you. So I do have a very special offer for today's workshop attendees. It's called the 3S Code High-Low Indicator Scanner. We built this out for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. What I just showed you built for 5 platforms. Also include chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. If you don't know what that is, we'll talk about it here in just a second. But what is the 3S Code High-Low Indicator Scanner? Well, let's show you. Let me show you again. This is the 3S code plotted onto your chart. So this is a 1, 2, 3 top here in CREE, another 1, 2, 3 top, and a 1, 2, 3 bottom. Here it is on Bank of America. There's your long, there's your long, there's your long. Here's the daily chart of Love, LUV, Southwest. 1, 2, 3 short, hits TP1 to the tick. Here's another short. Whoops, this is a bad trade. See how it reversed, stops us out. We get another chance to go short. This is all on Thinkorswim. Now, why do all the work when you can let technology do the work for you? So this is a screenshot of my Thinkorswim platform where I'm scanning for 1, 2, 3 tops in the Russell 1000. Only stocks that have options on them, $20 a share or greater. I hit the green scan button. Voila, I get my results. This is a screenshot of some watch list. I have one monitor dedicated to watch list where I'm running multiple scans across multiple asset classes, across multiple time frames, all at the same time. Now, we've been looking at this on TOS. This is what it looks like on TradeStation. Here's your indicator component. Here's your scanner component. Here's what it looks like on NT8. Here's your scanner, or excuse me, your indicator component. Here's your scanner component. Here's what it looks like on TradingView, an indicator on a 4-hour chart of Apple, and then finally on MT4. So the 4-hour chart of the Euro Kiwi, long, short, short, long. Now, full disclaimer, there is no scanner component available on MT4 or TradingView. It just doesn't exist, at least to my knowledge. If you know a Russian programmer, please introduce them to me, and we'll see if we can get it done. But we work with some very smart programmers, and we're only able to get the scanner built on TOS, TS, and NT8, but you get the indicator for all 5 platforms. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a daily process. I'm letting the platform and the technology scan the markets for me, locate the setups. I go to my platform for entry, and then I manage the trade through the exit. And you can start doing so today with the 3S code. Here's your special offer. This is good for the first 10 spots. It's no marketing gimmick or anything. We do this because I have my own support team, but I do manage my inbox personally. I read everything that comes through. I'll respond to you. I like communicating with my members. Here's the offer: 3S code, high-low indicator scanner for Thinkorswim, TradeStation, InTrader 8, TradingView, and MT4. Chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Now, we've recently offered this online at these prices, no joke, $19.97, $14.97, $9.97. But for the first 10 spots for this Black Friday extravaganza, if you will, we're going to offer this for a one-time fee of $3.97. The offer link is seasonalswingtrader.com/code. And I'm going to type that into the chat. It's www.seasonalswingtrader.com. Sorry, it's taking me a minute to write that out or type that out. seasonalswingtrader.com/code. There you go. It should be in the chat box. But let's talk about what you're getting. I want to make sure you understand the indicator scanner includes a visual plot of the 1, 2, 3 top and bottom reversal areas, entry, exit, stop, and target levels, all color coded, customizable settings if you want to change the colors, want to change the plots, multiple look back periods. If you want to expand it to find less opportunity or dial it in tighter, the value tighter to find more, you can do that. You can scan for setups only or trigger only, meaning those are in the process of setting up, or those that have actually triggered, meaning they've broken the number 2 levels. You can scan for tops, bottoms, or both at the same time. You can scan for intraday setups or swing setups, all at the same time across multiple markets. Bonus 1 is a 90+ page PDF manual. You're going to learn how to read charts, how to identify range markets, trending markets, other additional strategies, seasonal trends, order types, and more. Bonus 2 is my 25 top option strategy guide, literally strategies for all account sizes, whether you trade basic calls and puts to more intermediate advanced, such as condors, verticals, diagonals, butterflies, and more. Bonus 3, access to our private Discord channel. This is not a trade room. You could call it a chat room possibly, but it's a room that's open 24 hours a day, 7 days a week, 365 days a year. Everybody can post their charts, their analysis, questions, what's working, what's not. Hey, what do you think about this? What do you think about that? And we'll look forward to growing that here into 2021. Now, these are some testimonials that have come to me. I don't ask for them. They come in all the time of people using the 3S code. And that's important to me. People are actually taking action, and that's what it all comes down to. You have to take action if you want to see results. So another example of some trades we did all using the 3S code alone, okay? And I do eat what I cook, and this is a snapshot of my Thinkorswim account where I do my equity options trading. And my futures account here, you see I've got crude options, cotton options, copper options, yen options, nat gas options in the S&P. And then we'll conclude here with just one final example of what it looks like on your chart. Nice, easy, clean setup. So I am running out of time, but I want to make sure I answer everybody's questions. I prefer to wait for the close. I would prefer to wait for the close, and that avoids me getting into a potential false breakout. We'll consider Metastock, Dennis. I appreciate that. Just have not had enough demand for it, but we'll certainly consider that. Yes, it is Tsunami. So I trade use multiple time frame analysis. Yes, I do. I like to, so I will start from the top down, weekly, daily, 4-hour, hourly, and then even smaller if I'm trading intraday chart. I'll show you, I'll show you, I did promise you I'd show you today's action. So let me bring that over. Do me a favor, let me know if you could see the screen here. I'll bring the offer slide up, I'm sorry. No, this is a one-time fee. It's a one-time fee you own. This is not a subscription. Yes, you get access to all platforms: Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. We don't limit the license or platforms. So let me know if you can see this. Please let me know if you can see. This is a 10-minute chart of the E-mini S&P. My mouse is acting really goofy, but so here we can see on a 10-minute chart. Look, folks, what you see right now is what you'll see when you add the indicator to your chart. Look at these 10-minute moves here on the S&P today. Now, we had something here in the Asian session, and then really nothing today other than this last short going into the day. Now, if you feel like you're not getting enough setups, then just go down to the lower time frame. So let's take a look at the 5-minute. Here we had, you can see that we're getting some more setups. We got in a little bit earlier there on the 5. Notice that TP2 is right there on the 200-day moving average. That's what I love to see. It acts like a magnet. Let's look at a 233 tick chart today. 233 tick chart. We've got a lot of different examples here. Oops. Crude oil. Let's see. I'll look at crude. So today here on CRUDE, we have a couple of examples just going back to about 9 a.m. Let's look at the 10-minute. So here we have a couple of examples. Here's one at the start of the session, another long here, and then a short stopping right into the 200-day. We talk about that in some of the guides in the members area about using the 200-day, not trading into it, whether you're shorting or going long. I'll be happy to look at the 30-year bond on the daily chart. So here's crude on the daily. We're working, looking for a 1, 2, 3 top in play right now. You see that we got a count. So 30-year bond, ignore all these these horizontal lines here. You mentioned I used to trade options. How do you demonstrate? Well, really nothing to demonstrate other than when I get a signal, depending on what market it is, what time frame it is, and my overall outlook on the market environment. I primarily like to trade credit spreads, but again, there's a situation for everything, and that will dictate whether I'm just a straight call or put buyer. 6C, Canadian dollar. Okay, ignore these trend lines and some of these other numbers here, but we have a 1, 2, 3 top in the making. Last trade we had was back here in September. This is on the daily chart. You saw me put out a signal on SPG. Was that based on 1, 2, 3? SPG was actually not, but I did incorporate the 1, 2, 3. So I did have a 1, 2, 3 based, like it wasn't flagged to me, but we had a smaller 1, 2, 3, and I traded that based on some seasonality. Guys, I think my time is up. If you have any other questions, email me at support@seasonalswingtrader.com. I appreciate everybody that's already signed up. I don't even know if we're maxed out or not. I'll take a look shortly. But we've got a great lineup for the rest of the day. Thanks to Jeanette and the TradeThirsty team. Everybody have a great holiday weekend. Stay safe out there, and we'll talk soon.